China's gold price discounts now in 18th week as price breaks 400 yuan record in number one consumer. Gold prices edged back from 9-year highs near $1,800 per ounce in US dollar terms Wednesday but set a fresh all-time record in Chinese Yuan above 400 per grams as police in Hong Kong began arresting pro-democracy protesters and fresh outbreaks of COVID-19 saw local lockdowns re-imposed around the world. Condemning yesterday's imposition of China's controversial national security law on the former British colony, UK Foreign Minister Dominic Raab today offered citizenship rights to 2.9 million British nationals living in Hong Kong. Fixing at $1,768.10 at yesterday's London's benchmark auction, gold priced in dollars has only ever ended 3 months higher than it finished June 2020, and only averaged more than last month's $1,732 6 times, all of them also in 2011 and 2012. Inflows to gold-backed ETF trust funds rose again yesterday to top 727 tons across the first half of 2020, data from the Mining Industries World Gold Council say. That beat by 40% the prior half-annual record for flows into gold ETFs, set in H1 2009. Jewelry demand in contrast has evaporated in gold's big consumer markets amid the COVID crisis. Retail demand is negligible. Buyers are postponing purchases anticipating a correction in prices. The Economic Times quotes one Mumbai bullion importing banker after rupee prices in the metal's number 2 consumer nation today set yet another new all-time high at rupees 48,871 per 10 grams. Despite setting new yuan records at 400 yen per gram, Shanghai gold is now in its 18th week of trading below London quotes, a record stretch suggesting that domestic demand in the metal's number 1 consumer nation, from which bullion exports are banned, continues to lag badly below levels of supply after China became the source and the first nation to impose social and economic lockdowns during late January's strong gold buying festival of Lunar New Year. COMEX August gold futures traded for New York settlement today pulled $10 below Tuesday's spike to 9-year highs above $1,800 per ounce. But looking at latest available trade data, demand for fresh bullion in Thailand remained almost non-existent in May, says specialist consultancy Refinitiv, as the domestic market was awash with surplus gold as a result of the deshorting of gold assets by investors and increased scrap. Gold prices in Japan also set fresh all-time highs on Wednesday, beating the top of the 21st of January 1980 thanks to today's additional 8% VAT sales tax to reach 6,826 yen per gram. Back in Western investment demand meantime, funding liquidity is pouring across markets with central banks fighting hard against recession, says one London bullion market-making bank in a note. Against this backdrop, analysts are bullish gold and favor real assets over what is considered a complete disconnect of financial markets with the reality in the streets. Risk aversion is not the whole story, adds strategist Jonathan Butler at Japanese conglomerate Mitsubishi, noting the U.S. stock market's 22% gain in Q2, the best performance since the 1930s as expectations of a V-shaped economic recovery abound, driven by that unprecedented fiscal and monetary stimulus. But there is undoubtedly risk hedging going on in gold and other precious metals right now, helped by the negligible opportunity cost of holding non-yielding precious metals in a world of negative real interest rates. Australia last night re-imposed lockdown on 300,000 people in the suburbs of Melbourne, its second largest city. English football's Wigan Athletic went into administration, seeking a rescue for the near 90-year-old championship club as the COVID-19 ban on attending large gatherings hits its revenues.